Hey everyone, Couch Investor here with the first episode of a new series I'd like to call What Happened This Week in the Stock Market, where I pick a couple of topics that I didn't cover during the week in the usual videos that I still feel are important or interesting to discuss. So in this video, we're going to talk about Peloton and the state of the company, what I'm doing, what I'm thinking about the current situation, Microsoft, Activision, Netflix earnings report, and then preparing ourselves for next week where most big tech companies will report their earnings and what that could mean for the market. Now, this video is sponsored by the Daily Upside, a free financial business newsletter you get daily in your mailbox. You can read it in just 5 minutes. If you want more information, check the link down in the description below. It's free. Alright, so first up, let's talk about Peloton. I've talked about it a couple of times on this channel, the good and the bad. Currently, I still hold Peloton shares. You can laugh all you want. The company itself is still performing better than what you would expect after everything that has happened to it. When I have a look at their preliminary numbers for this quarter, I was very surprised because it's much better than what I had expected. And with regards to the rumors that they are halting production, this is a note from the CEO released 2 days ago. And he says here very clearly, rumors that we are halting all production of bikes and treads are false. Now, yes, I do want to note that they added the word all, so maybe they are halting a portion of it to get back on track, to stop burning cash. That's possible. But the news outlets have really pushed the narrative of saying they are just not producing bikes and treads anymore, which isn't true. Now, before I go and look at the numbers, I do want to say that yes, what management has done in the last couple of months had me concerned. Not gonna lie about that. Obviously, the stock took a major hit. Management said one thing during the earnings call, then suddenly does the other thing. That's a red flag. It has flown, well, the whole company management has flown too close to the sun. COVID has obviously pushed Peloton's growth way forward. So yes, maybe it got to their heads, but again, management, top class, everything shouldn't really happen, right? Also, if you look at Peloton before COVID, it was doing very well. It was growing each and every quarter, each and every year. They were actually even profitable for 3 quarters until they started to spend too much money because, well, demand was so high and they probably expected these lockdowns and everything that was happening to go on for a longer period of time, which did not happen. Now, let's have a quick look at the numbers. So these are the preliminary second quarter for the fiscal 2022. Now, total revenue of approximately $1.14 billion. I do want to say that Peloton is trading at a bit less than 2 times sales, right? However you want to put it, 2 times sales is very cheap. They previously guided for 1.1 to 1.2 billion, so they're right there in the middle, which is good. Connected fitness subscription of approximately 2.77 million versus guidance of 2.8, 2.85, so a little miss on that, but still 2.77 million people are still subscribed to Peloton. Average net monthly connected fitness churn still lower than it was, 0.79%. I believe last quarter was 0.81, 82 or something like that. And then this is also good, much better than I expected. Adjusted EBITDA in the range of negative $270 and $260 million. They guided for negative $350 and $325 million. So much better there. So this was from last quarter. Connected fitness subscription have been going up and up even before COVID began. Yes, this decline here is worrying and that's why the stock took a huge beating. But if you add Q2 fiscal year 2020, you will see a huge spike here. Usually Q2 is a better month because, well, it's winter, everybody's staying inside, New Year's resolution, blah. So keep an eye out on that. Keep an eye out on the average monthly workouts as well. It will probably go up in Q2 and maybe even in Q3. So that's it with regards to Peloton. Am I adding to my position? Currently not. I'm waiting for the earnings call. I want to listen to what they have to hear, even though the last earnings call was pretty deceiving because they said one thing and then they did the other. But still, I would like to see the full earnings report, then hear what management has to say. Also, right now at current valuation, current market cap, Peloton is a pretty good acquisition target for the likes of Apple or Nike. So we'll see what happens there. Now, before I jump into the Microsoft and Activision topic, I just want to tell you a bit more about the Daily Upside. So the Daily Upside is a free business and investing newsletter that over 200,000 people subscribe to, myself included. Instead of pushing clickbait financial titles and biased coverage, the Daily Upside provides actionable insights and clarity on the stories shaping the business world. It has become the first thing I read in the morning. It's about a 5-minute read, so it's not that long, and they aren't afraid to dive into the hot topics and give a real, high-level, unbiased analysis. Recently, I have also been enjoying their weekly edition newsletter that goes a level deeper into niche industries, so that's great if you have time on the weekend to read a bit more. As someone who looks to stay on top of news to create videos just like this, I can't recommend the Daily Upside enough, so if you want, you can sign up using the link down in the description below. It's free, you can always unsubscribe later. Alright, now let's talk about the big acquisition, Microsoft buying Activision for $69 billion. Very nice number, by the way. This acquisition will not happen until 2023, and even then, it might not happen at all because, well, Microsoft is one of the biggest companies on the planet. $69 billion. Activision is operating in a couple of markets, so it needs regulatory approval in a couple of markets as well. We've seen the struggles right now with antitrust issues, etc. We've seen that with Nvidia and ARM, although it's not gaming, it's national security, it's chips, etc. So it's another category, but still, Microsoft buying a huge company right now. Let's see what happens. Also, if you look at the price action with Activision, it rose 30%. It sits now at around $81 or so. Microsoft will pay $95 per share for Activision, which means if you think this deal will go through 100%, just buy it now and you get $15 for free basically per share. So maybe the market knows or is a bit skeptical of this deal going through. I don't know, do you think this deal will go through? Do you think it's going to take more time? Let me know down in the comments below. But anyways, for the overall picture, it's a great deal, right? Besides the price, which I believe is expensive, but the merger between both of them is good. We're going to see here a bit why. So it has all three components here, right? Microsoft and Activision and Blizzard, content, community, and cloud. For the content, obviously legendary games, Warcraft, Call of Duty, then you have King for the mobile games, basically billion-dollar franchises. For the community, you have nearly 400 million Activision and Blizzard monthly active players. Then you have 25 plus million Game Pass subscribers, Microsoft Gaming, Xbox. Which goes into the next part, which is to me the most exciting, probably the most important one, is the cloud part. Millions of Xbox cloud gaming users in 26 countries. Cloud gaming is still very early. Right now we all need hardware to play our games and the storage is very limited. If you play Call of Duty, you know that after updating the game twice, you already used probably half the space on your PS4 or PS5. Cloud gaming is going to be huge. And this merger, this acquisition of these both companies, don't forget, Microsoft already has Minecraft, Xbox. They're doing very well on that side, the gaming side. You bring a franchise, a huge company like Activision, probably going to be very good. So you can talk about the metaverse, etc. in the future. But right now, for gaming, pretty good deal. Also with management, they're going to clean the house. I don't think Microsoft would like to get all the scandal that Activision has in its baggage. And now let's quickly look at Netflix earnings report and why the stock is down 20% or so. So basically they reported revenue of $7.7 billion, which was in line with expectations. It's a year-over-year growth of 16%, which begs the question why it was or why it is still a FANG stock. Makes no sense, right? Diluted earnings per share, $1.33, beating the estimates by quite a lot actually. And it ended the quarter with around 222 million paid subscribers. That's around 9% growth year over year. So they added 8.28 million. Now, the main reason why it's down a lot is basically because of guidance. Weak guidance. They are expecting to add just 2.5 paid net subscribers. I believe expectation was around 3.5. So big miss on that. Revenue will only grow 10.3% year over year. Again, yes, Netflix has also gained something from COVID. Growth has been pushed forward. During the earnings call, management wasn't really able to be very precise about guidance and why they think it's slowing down, etc. And to be honest, their track record is pretty good. So looking at it at just 1 quarter or 2 quarters at a time makes no sense. CEO is probably one of the best in his job because look at Netflix track record, right? The last 12 years or so, it's probably the best performing stock or one of the best performing companies out there. Overall, yes, a good quarter, guidance a bit weak, but then again, we're in this type of environment right now where even a company like Netflix doesn't really know what's going to happen in the next couple of months. And to be honest, for a long-term investor, okay, fine, you don't know what's going to happen in the next coming month, coming out of a pandemic, I can deal with that. I'm not a Netflix shareholder, but I'm an avid Netflix user, and I love the content that they've been putting out, and that's probably one of the most important points. Alright, and last point, because this video has dragged on for more, I thought this was going to be 10 minutes, probably much more. But anyways, info is very important. Next week, most big tech companies and Tesla are reporting earnings. They will basically put the benchmark to what's going to happen in the next coming month or even this year. If big tech companies can show us that obviously the economy is doing well, numbers are nice, guidance is good, stock market will probably start to rally. If they show a sign of weakness, doesn't really matter if earnings is good. If guidance is weak, everything goes down, especially if those huge companies like Microsoft, Apple, Amazon, Tesla, Facebook, whatever, if they show a sign of weakness, it's not good at all for the market. So obviously what you could do is brace yourself for impact or pray and hope that they report great earnings. I am pretty confident that Tesla will have a huge quarter. Apple, on the other side, might not have such an amazing quarter because of everything that's gone on with the iPhone 13. I don't think it was such a great success, also with supply chain issue, etc. But I will say that I am now 70-30, 70 meaning those are going to beat earnings and probably have good guidance as well. 30, some of them might slip up. Now, let me know what you think. Who's going to slip up? Is the market going to rally? Is the market going to go down? Let me know down in the comments below. Also, those huge companies weigh a lot on the Nasdaq, the S&P 500. So whatever they do, if they go up, they'll take everyone with them. If they go down, they'll take everyone with them as well. Right now, I believe the Nasdaq is down around 15% since its highs. So it's a lot, but we can always go lower. So do whatever is good for your portfolio. That will be it for this video. Fun first episode, bit longer than expected, but hey, who cares? Great info, great topics. If you like it, if you want to see more, let me know down in the comments below and hit that thumbs up button. And if you haven't subscribed to this channel, maybe hit that subscribe button. As always, guys, take care, stay safe, and see you all in the next video. Bye bye.